welcome back to Crypto Saving Expert, where we talk about the latest cryptocurrency news. Oh gosh, I'm replaying everywhere. Let me mute that. Hello and welcome back to Crypto Saving Expert, where we talk about the latest cryptocurrency news and take a look at the markets so that we all know exactly what is happening. My name is Jess and we do these live streams every single weekday, talking about the price of Bitcoin, talking about the latest cryptocurrency news. A little bit of delay there. We're also streaming to Binance Live today, so we're doing two streams at once. Slightly confusing setup, but I think we've got the hang of it now. Let's take a look at the price of Bitcoin and see what is happening here. We have Bitcoin sat at $27,700. So we have seen a little bit of a downfall in the last 24 hours. We're down 1.65%. We will discuss the reasons for that in just a second. We also have Ethereum sat at $1,757, down 2% in the last 24 hours. Obviously, we heard the US interest rates last night at 6 p.m. UTC time. It was announced that the US have increased interest rates by another 0.25%. So we are going to discuss that in today's video. We're also going to discuss Coinbase being issued a Wells notice by the SEC. We've got a lot of news to discuss today, so it's best just to crack on and get into it. Let's take a look here at the chat. Space Invader says, getting flashbacks being stood up. We're here now, ready to start, but the punctuality will improve from tomorrow. Apologies about that. It was just this week we've we've changed the setup of the stream and we've changed some things behind the scenes, so just taking a little bit of getting used to, but we'll be back in action from Monday. Let's take a look at some news here and then we will get onto the Bitcoin chart at the end of today's stream. Before we get into the news, please don't forget to like and subscribe and press that bell notification button so that you don't miss the latest cryptocurrency news. Let me check that everything is running smoothly on this news stream. Here we are. First, we are going to talk about the US interest rates. So the Fed has increased the interest rates by 0.25 basis points, 25 basis points yesterday, not 0.25. So we can see here the probability of a rate hike of 25 reached over 80% price. This was exactly as expected. So it is believed that this was priced into the markets before they made this announcement. We had seen a solid move to the upside in the last couple of days before this announcement. And then yesterday at the point of announcement, as usual, we saw a huge amount of volatility. I was live streaming it over on my channel. We saw volatility galore. And then we saw a huge jump to the downside when Jerome Powell opened his mouth for a half-hour discussion afterwards. But this was the period of time when the news was initially released. Let's take a look at this article anyway. So there was a suggestion that the Fed could pause for March, and it was believed that there was a possibility, there was a 20% probability that we were actually going to see interest rates stay the same and see a 0% change. But this wasn't the case. It appears, regardless of what is occurring with banks, the Fed is set on getting a hold of inflation for the long term in the US. So inflation in the US increased to 9.1% during the height of the pandemic. And to calm down inflation, the US have the power to change interest rates. So interest rates mean that people are spending less, demand is reduced, and therefore inflation will come down. But the problem that they're seeing with this is that US interest rates rising means that the bonds that the banks hold are of less value than of bonds issued in today's markets. So essentially higher interest rates mean that banks are sitting on bigger unrealized losses, and that is a huge problem, and this is why we've seen a couple of banks shut down in recent weeks, and this is an effect of these increasing interest rates. So to deal with this, there was a possibility that they'd stop hiking interest rates for the month and let that all calm down, but they've chosen not to. They've chosen to continue on their plan of action, trying to reduce that inflation rate as quick as possible. We have seen inflation year on year, March to March, be at 6% in the US. It is still on the downfall, but we're waiting to see when we will get to this point where we get to the terminal rate, where the Fed decide to stabilize interest rates and let inflation gradually continue downwards. We're not yet at that point, but we're expecting that within the next couple of months. Space Invader said, "What's your channel, Jess?" It's at Interpret Crypto. Please check that out if you haven't already. I'm sure Jonah won't mind me saying. Taking a look here. The Fed is now moving towards its terminal rate, where it will announce it is pausing rate hikes and will likely leave them at the terminal rate until inflation is sufficiently tamed. So that is what I've just said. That is what we're expecting to see. Obviously, a couple of us were hoping that we'd see a 0% change in the interest rates yesterday, but that wasn't the case. We did see a 0.25% increase, but that will affect the banks. They're in a difficult situation. They can either help out the banks and pause the interest rates for now, or they can continue increasing it to reduce that rate of inflation, and they are on that mission to get inflation down to 2%. So it's one or the other was going to have to compromise, and they've chose to continue on their plan of action, so we'll see how that plays out in the next couple of months. Let's take a look at the next article here and see what's happening. Before we do, please don't forget to like and subscribe and press the bell notification button to help us grow the channel as big as possible. We're on a mission to get to 100,000 subscribers, and we are currently on, let me take a look at this, 2,770 subscribers. So let's try and get to 2,780 by the end of today's stream. We are also on, well, how many likes are we on today's video? Currently, we are on, let me drag this out, 14 likes. That's really quick. Please make sure to continue pressing that like button and help us grow the channel. Let's take a look now at this article here. We have US banks are losing billions of dollars to the Fed. So small and mid-sized American banks are reportedly losing money to the Federal Reserve Board as depositors opt for more secure options to ensure their funds remain safe should crisis arise. So there's a huge amount of fear within the US banking system right now. And according to The Economist, depositors in American banks are dwindling as users have begun switching to low-risk investment vehicles like money market funds. So after SVB's failure, money market funds saw over $121 billion in inflows. Interestingly, funds that make it to the accounts of money market entities rarely find their way back to the banks, but this has not been the case since the inception of such funds. Before 2013, money market funds helped shuffle deposits in the banking system. Since cash does not directly flow into the funds, they accept deposits through their bank accounts. To acquire the short-term debt or commercial paper in which the funds want to invest, they in turn transfer the funds into the bank accounts of the institutions selling the assets. But the reverse is the case now, as money market funds appear to be sucking deposits from the banking system. The reason for the development is the reverse repo facility, with the Fed introduced in 2013. It's worth noting that the Fed introduced the reverse repo facility to escape ultra-low borrowing rates in the system. However, vast quantitative easing and regulatory adjustments increased the use of facility over the years. Now, we've seen a huge amount of quantitative easing in the last couple of weeks. We have seen $300 billion just be pumped into the US ecosystem, causing an effect we will see over the next couple of months. I've just read a really interesting news article this morning about banks all over the world and their unrealized losses held on their bonds. This is more related to the interest rates we've just seen, and we can see that banks are holding a huge amount of unrealized losses for the next 3 months. And after the 3 months, that should pan out and it should start to calm down. But until then, people are speculating that we could see hyperinflation in the US and a huge amount of other problems, but something to keep an eye on. We are seeing contagion within the banking system of the US. Hopefully this calms down and we make it through the next 3 months, and then the fear should start to calm down. Let's take a look at the next article we have here. The Coinbase have received a Wells notice from the SEC. Now let's discuss this a little bit more. Let me change the tab over on the new design of the live streams. I hope you like it. It's all fresh and brand new for this week. I really like it. I think it's much better than the old one. Please let me know in the chat if you do agree. And before we continue with today's news, please don't forget to like and subscribe and press the bell notification button so that you don't miss the latest cryptocurrency news. Let's see how this is going. Today we are streaming on both Binance Live and to YouTube Live at the same time, multitasking at its best, and maybe one day we'll start live streaming to TikTok as well. We're going to try and stream to all platforms to get as much exposure as possible. For those that are new here, please make sure to go to cryptosavingexpert.com. This is the website that we use in all of our videos, the most reliable cryptocurrency news, guides, courses, and markets, all absolutely for free. Just go over to cryptosavingexpert.com, press that big blue sign sign up button, put in your email, create a password, and you have access to all of this information completely for free. We spent over a year creating this website behind the scenes, and it's launched just over a month ago now, and we have seen already over 5,000 people sign up to our website to get those free courses. The courses have text and they have videos presented by yours truly, so make sure to check those out if you haven't already. Also, we have market data as well, so you can keep track of your favorite altcoins and cryptocurrencies to see what's happening in the markets. But right now, we do have an announcement that the Coinbase have received a Wells notice. Now, a Wells notice is a prelude to the filing of charges by the SEC against the publicly traded company. Now, Brian Armstrong, the CEO and founder of Coinbase, tweeted about this yesterday. They said that they received a Wells notice from the SEC focusing on staking and asset listings. A Wells notice typically precedes an enforcement action. So a Wells notice is named after John A. Wells, who served as an SEC advisory committee chair in 1972. They are issued by the agency to alert a company. In the case of Coinbase, the SEC is planning to bring an enforcement action against them for alleged violations of securities laws. Now, this isn't the first time we've seen the SEC issue Wells notice to cryptocurrency companies. Earlier this month, or maybe the end of February, we saw a Wells notice being issued to Paxos, the issuer of BUSD, and they have now stopped minting of their stablecoin. And we are going to, I imagine, continue to see Wells notices be issued by the SEC. They are trying to crack down on cryptocurrencies and trying to regulate the space, specifically with staking and different things like that. They are saying that many different cryptocurrency companies are issuing unregistered securities, and we will see how this plays out in the next couple of months. All of these companies seem to be standing up for themselves in this scenario and saying, this isn't what's happening. We are offering cryptocurrencies as a commodity. This is a whole debate to have. Whether an asset is a cryptocurrency, is a commodity, or is a security depends on the Howey test, which is a 4-step test. If the asset fits within the category of those 4 steps, it's said to be a security and therefore is regulated by the SEC. And if not, it's said to be a commodity, and the regulations are just much less strict. So many different cryptocurrencies try and put themselves in the category of a commodity, but the SEC seem to be stepping up and saying, no, this is actually a security. And if it's a security, all of these different cryptocurrency exchanges are offering unregistered securities, which becomes a whole new problem in itself. But we'll see how this unravels in the next couple of months. As we can see here, this is the first step, which typically proceeds into an enforcement action, but we'll keep reporting on this here on the channel. Please don't forget, if you haven't already, to like and subscribe and press the bell notification button so that you don't miss the latest cryptocurrency news. We do these live streams every single weekday, talking about what's happening in the markets, keeping us up to date with the latest news, so make sure to check that out. Let's take a look now at what is happening in the next article here. We have White House says crypto reflects an ignorance of basic economic principles. So let's talk about this here. And don't forget, at the end of today's stream, we will be doing some Bitcoin analysis as well to see what's happening in the markets. Please let me know that the stream is running smoothly. I don't know if streaming to 2 platforms is causing an issue or it's running absolutely fine. Please let me know if we do have any problems in the comments of today's stream. We can see here the White House says crypto reflects an ignorance of basic economic principles. So the White House downplayed the proposed benefits of crypto, saying the design is detrimental to consumers. In a recent published annual economic report of the US government, the White House described the perceived appeal and benefits of Bitcoin and cryptocurrencies, saying, in its view of the reality of crypto assets, the emerging asset class does not meet all the functions of money and mostly speculative. So I've highlighted the huge points within this article, which is that they've said crypto assets to date do not appear to offer investments with any fundamental value, nor do they act as an effective alternative to fiat money, improve financial inclusion, or make payments more efficient. Now, let's go down the rabbit hole of why this is completely wrong. Saying that they do not improve financial inclusion is absolutely bizarre. Anybody with access to the internet can create a cryptocurrency wallet and make online transactions. This cannot be said for the traditional financial system. Usually, you have to provide personal ID and things like that. It's not as simple as just going online and creating a cryptocurrency wallet account address. So that is completely untrue. We can also make cross-border payments much easier and for lower transaction fees and much quicker as well. So they are providing a better financial vehicle, in my opinion. We can see here that the reports also argued that artificial scarcity of Bitcoin, mimicked by other unbacked cryptocurrencies, is the selling point since they are traded without the fundamental anchors, and the design of these assets frequently reflects an ignorance of basic economic principles that have been learned by economics and finance over centuries, the report continued. And it says the inadequate design is often detrimental to consumers and investors. We've also seen them say that the majority of participants are not acting in compliance with existing laws, especially in disclosures surrounding cryptocurrencies that are securities. Now, the point I would like to make for this is that the Howey test, which determines whether an asset is a commodity or a security, was created in about 1942. Don't quote me on that, something around that time. This is a really old test and it's not suitable for cryptocurrencies. We need clearer regulation. I'm not against regulation, but these regulations need to be clear. And they need to allow the cryptocurrency space to continue to grow. But right now, we don't have clarity on regulations all across the world, not just in the US. We have recently seen Coinbase launch a campaign. I think it was called Coinbase 456, something like this. And they are trying to get cryptocurrency users' voices heard when the US is trying to make different regulations about the space so that they can actually understand how to regulate it in the correct way. Because right now, that is a huge issue. We want to see regulation, but we want to see it be done in a way that allows the industry to continue to grow. And that is a major thing that we need to be looking out for within the next couple of months, because they are really cracking down on the regulation side of things right now, as we've seen earlier in today's news. Let's continue on to the next article now, but before we do, please don't forget to like and subscribe and press the bell notification button so that you don't miss the latest cryptocurrency news. We do these live streams every single day at around 12 a.m. talking about the latest news and seeing what's happening in the markets. As I said, we will get onto some Bitcoin analysis towards the end of today's stream, so please don't forget to stay tuned for that. Let's take a look at this. Cathie Woods, who is an American investor, has said that Bitcoin's price behavior during the banking crisis will attract more institutions. Let's take a look here. So Cathie Woods, the CEO of investment management firm ARK Invest, believes that the price behavior of Bitcoin during the recent US banking crisis will attract more institutions to the crypto industry. Now, as I spoke about earlier in today's stream, there's been a huge issue with the banking system over in the US. We've seen a couple of banks shut down, and this is because the hiking of interest rates that we've seen over recent months. And we are now seeing Bitcoin react to this in a positive way. So there was a huge amount of concern when this news first came about. 3 crypto-friendly banks in the US were shutting down all within one weekend, and this was a concern for the cryptocurrency industry. USDC's issuer Circle announced that they were holding reserves in SVB Bank, and this caused USDC to depeg. There was uncertainty about what was going to happen in the markets, but the US government decided that they would back any deposits into these 3 banks and help those users get their funds back. So USDC repegged the dollar, and Bitcoin was seen as a safe haven for people that no longer trusted the banking system. And the price of Bitcoin has absolutely soared off the back of this. So we can see here, while equity markets trembled and stock markets of US regional banks slumped, BTC went through the roof, racing from $19,570 to $22,600 during the weekend of SVB's collapse. And we continue to see it soar in that week. We saw it go from $19,570 to $27,000 within less than a week. That was absolutely bizarre. I was very grateful to be one of these people that managed to buy the dip again below $20,000, an opportunity that I don't believe is going to be around for the long term. So we can see here, despite the brewing global crisis, the digital asset continued to rally, gaining more than 44% in just 2 weeks. Now, this makes me laugh. I have so many friends that have looked at the cryptocurrency space and thought they're too late to get into Bitcoin because they've missed the opportunity, and it's only people that invested years ago that have managed to see big gains. But we've seen 44% rise in the biggest cryptocurrency in terms of market cap in just 2 weeks. It's still an asset that can create huge gains. Let's take a look at this. So, Kathy Woods has pointed out that the usual problem of liquidity drying up during financial crises did not affect Bitcoin. The asset moved in a different direction from the equity market. And she said that Bitcoin's behavior would lure more institutional investors into the crypto ecosystem. We have a quote here that she has said, "But we do believe that the price through this crisis is going to attract more institutions. For example, we've done a report targeting institutional investors and the allocation that they should make if they care about this new asset class, diversifying their portfolios, and believe it's somewhere between 2.5% and 6.5%. Meanwhile, a recent report by American crypto exchange Coinbase revealed that institutions, including traditional hedge funds, asset managers, and private wealth entities, have doubled their crypto purchases in the last few weeks. So we're seeing these big players in the game taking advantage of the dip, buying in throughout this bear market, and I'm sure they will all be very, very grateful they've done so. During the next bull market, we are seeing institutions and big players taking advantage of the cryptocurrency space, and that is a signal for me that the space is about to perform incredibly well. Let's take a look now at the next article. Before we do, please don't forget to like and subscribe and press the bell notification button so that we don't miss the latest cryptocurrency news. As I said, we do these live streams every single weekday talking about what's happening in the market. We have a huge amount of viewers right now. We currently have 332 viewers over on Binance Live, as well as streaming onto YouTube. If you are new here, please make sure to go over to YouTube and subscribe to us at Crypto Saving Expert. We do these live streams every single day, and we'll finish it off with some Bitcoin analysis here as well. Let's take a look at what else is happening in the news. Let's take a look at this next article. We have Music NFT Marketplace announces partnership with leading record label Universal Music Group. So NFT Music Marketplace Centuarify, I'm not going to have said that correctly, has announced its partnership with the Central European arm of UMG, the largest record label in the world, to bring UMG artists into the Web3 space. This is the news we like to see. On this channel, we are always talking about wanting to see regulation, and regulation done right, and regulation in a clear way with clarity of how we can continue to build the space. And the second thing we want to see is adoption. We want to see how we can get people from Web 2 to Web 3, and something like this is a brilliant example of how we could do so. Other things that help bring in adoption, I mean, NFTs, although they're not something that I'm particularly interested in and not something that I personally invest a huge amount of my money into, are a brilliant way to bring people from Web 2 to Web 3. That is something we've got to give them. The other thing that we've got to give them is meme coins. Meme coins are another way that we get people from Web 2 to Web 3. Yes, they hurt a huge percentage of their investors. I'm not a meme coin investor at all, but meme coins and NFTs are probably one of the two of the biggest ways we get people from Web 2 to Web 3, and I'm always here for adoption. So let's take a look at the chat quickly. Tim said, I bought a small amount of crypto after the dip yesterday, fingers crossed. Yes, I am one of these investors that likes to dollar cost average in whenever we see a dip. I'm not really like dollar cost averaging in at the same time every day for the majority of my portfolio. It's just when we see fear in the markets, then I'll start just staggering in some limit orders. And then when we see some greed in the markets, I'll just start staggering in some sell orders. And that is how I dollar cost average in and out throughout the dips and throughout the peaks, just to continue having money on the sidelines. My biggest piece of advice I could give to anybody within the cryptocurrency space, obviously nothing is financial advice, I only manage my own portfolio, but it's to get your emotions out of your trading. If you are emotionally trading, you are going to get wrecked. And how I find the best way, the way I find to get my emotions out of my portfolio is to dollar cost average in and out. If I have stable coins set on the sidelines, it means if the markets are going to go down, I'm going to feel happy about it because I can dollar cost average in. And if the market goes up, I'm going to feel happy about it because I've made some profits. So it's a win-win, and that is how I get my emotions out of my portfolio, and that is how I've made my portfolio improve over recent months. I mean, I've made all the mistakes in the book in cryptocurrency over the years. I've now been full-time crypto for 3 years and become a profitable trader and investor, but it took a long time to get to that point. It's a very volatile asset and industry to be a part of, but you have to sometimes make some mistakes to learn from them to understand how best to perform in the markets. Let's take a look now. I was wondering why my YouTube was so behind, but we're all up to date. We're all running smoothly. Let's take a look at this article. That was a complete sidetrack from from the actual story today. Let's see how this is going over here. Everything seems to be running smoothly with the live streams. We have Music NFT Marketplace, and that's partnership with leading record label Universal Music Group. The partnership gives the Web3 company exclusive rights to work with any artists signed to UMG, allowing musicians to mint NFTs and connect with their fans digitally. Now, as I said, I'm not one for NFTs, but NFTs in the music industry is something that I can get on board with. I'm not usually a fan of NFTs because most of the time they have no real utility, and I just think it's a way to create money quickly. But when they have a utility like this, it's something that interests me. So we can see the Web3 markets itself as the Web3 company, as a Web3 based music marketplace, ticketing platform, and a creative studio connecting the music industry into the new digital world of Web3. The NFT music project was launched with the aid of the Ocam DAO incubator, which helps projects obtain VC funding and develop and market the product. So UMG is the largest record label globally and has 1/3 of the world's top 100 music artists on their roster, including Billie Eilish, Bad Bunny, Taylor Swift, and Sam Smith. With this collaboration, they've said our goal is to create engaging experiences and deeper connect fans closer to their favorite artists and songs using the force of Web3. To kickstart the new partnership, they will be releasing 3,333 unique NFT trophies as part of the Universal Collection that will be a celebration of each artist's achievements and represent the ultimate fan token. Each NFT trophy will be a free mint and give the owner access to exclusive releases and events, a VIP digital community, VIP backstage passes, and pre-sale access to all future releases from UMG. Now that is the kind of NFT that I like. That's a real world use case that people in Web2 will actually be interested in. If people in Web2 that don't know anything about cryptocurrency see that they can get pre-sale access for their favorite artists, they're going to be on board with this. They're going to try and understand how they can get access to this, educate themselves about NFTs, educate themselves how they can interact with the blockchain to buy and sell these NFTs. So this is a great way to onboard people from Web 2 to Web 3, and I hope this continues, and I hope this picks up some pace and we see more people enter the space because of this. This is definitely something that excites me and something that I'll be keeping an eye on in the next couple of weeks. Let's take a look at the next article here and see what's going on here. Please don't forget, if you haven't already, to make sure to like and subscribe and press the bell notification so that you don't miss the latest cryptocurrency news. And please let me know that if the stream is running all smoothly. I think streaming to two platforms may cause a little bit of a lag, so let me know if there are any problems and I'll work on that. Let's take a look at the next article here. Don't forget, we are streaming on both Binance Live and YouTube right now, so if you are new here, make sure to check out cryptosavingexpert.com. We give out the most reliable and free cryptocurrency news, guides, courses, and market data, all completely for free. Just go to cryptosavingexpert.com, press that big blue sign up button, put in your email address, create a password, and you're good to go. Also, when you create that password, there's a little tick box option, and if you tick that box, you get access to our completely free newsletter that goes out every single Tuesday at 11 a.m, recapping the previous week in crypto and predicting what could happen next in the week of in cryptocurrency markets. Really useful data there, all completely for free. We've spent over a year putting together this website with the most informative pieces of information, so make sure to check them out if you haven't already. Let's take a look at this piece of news here and see what's going on here. We have Jake Paul, Soulja Boy, and Akon, and 5 others charged by the SEC for promoting Tron and BitTorrent. So 8 American celebrities have been charged for promoting TRX and BTT, which the SEC have classified as unregistered offerings. Now, this is something we spoke about earlier in today's stream. We determine if an asset is a commodity or a security by the Towie test that was created in about 1940, and that is a really old test, and it doesn't really fit the new industry of cryptocurrencies. The SEC are saying that many different cryptocurrency exchanges are offering unregistered securities, and now they're going after influencers as well, saying that endorsing, would we say, promoting unregistered securities as well. So we can see here, They have said that these 8 American celebrities have received compensation to promote crypto asset securities without disclosing it. So the group includes Lindsay Lohan, Jake Paul, and 6 others. According to the SEC's report, the celebrities illegally touted TRX and or BTT without disclosing that they were compensated for doing so and the amount of their compensation. The SEC also said TRX and BTT tokens were unregistered offerings and similarly charged the founder Justin Sun and 3 of his companies involved in the sale of the tokens. So excluding the 2 here, the SEC said that celebrities had agreed to pay more than $400,000 in disgorgement and interest and penalties to settle the charges against them. However, according to the report, they did not admit or deny the findings. So this is something I expect we're going to continue to see from the SEC here, people promoting cryptocurrencies and securities in the US without disclosing that it is an advert, essentially bringing users on board is slightly misleading, and that is what we are seeing there. Let's take a look at the next article here and see what's happening. We have the US SEC sues Justin Trump's son for crypto violations. So we can see here that the SEC has filed fraud and securities violation charges against the crypto entrepreneur and Tron founder Justin Sun. According to the press release, the SEC is charging Sun and his wholly owned crypto companies Tron Foundation, BitTorrent Foundation, and Rainberry for the unregistered offer and sale of crypto tokens TRX and BTT. So the SEC again are classifying these as securities and are suing the different companies here. So that is what we are seeing there. Please don't forget, if you are enjoying today's stream, to like and subscribe and press the bell notification button so that you don't miss the latest cryptocurrency news. I imagine that Justin Sun is going to stand up for himself in this scenario, say that they're not securities and fight this battle. We are seeing that over and over again. The SEC are targeting different exchanges, different companies, and they're saying, no, this isn't correct. And all of this is happening because the clarity between a security and a commodity is just not clear enough. And the Howey test was created when cryptocurrencies weren't around. We need clearer regulation for the space so things like this don't have to take place. Let's take a look at the next article here and see what's happening. Telegram's wallet bot adds support for Tron-based USDT. So on the same token, the Tron founder Justin Sun has just been charged, or is about to be charged by the SEC, and at the same time, Telegram's wallet bot adds support for Tron-based USDT. Now, USDT is the stablecoin, the biggest used stablecoin in cryptocurrency, and it runs on many different networks. Telegram are taking advantage of USDT on the Tron network, so Telegram users can now send, receive, buy, and trade the most widely used stablecoin through the wallet bot on the messaging platform. Now, this is really interesting. This is actually quite exciting. So the sending USDT will be made as easy as sending a photograph on Telegram. Buying, selling, and trading are already available. You can also send USDT to other Telegram users at no extra cost with 0 transaction fees. So this is really interesting. If you just want to make a quick payment to a friend, Telegram may be the platform to do it on now. I know not many people around my area use Telegram, or except for cryptocurrency conversations. Not many of my friends are on Telegram. It's only when I'm doing really work related things that I do use the platform. But if it were to get adopted a little bit more, this is definitely a feature that would be taken advantage of. Let's take a look at this. We have sending USDT will be as easy as sending a photograph on Telegram. Buying, selling, and trading are already available. You can also send USDT to other Telegram users at no extra cost. With the new integration, USDT becomes the 3rd digital asset supported by the wallet bot on Telegram, in addition to Bitcoin and Toncoin. Support for BTC and Ton was added last April by the wallet team. Now, Tether is now the last stablecoin standing. The wallet bot on Telegram adding support for Tron-based USDT comes at a time when Tether's dominance in the stablecoin arena is growing due to a sequence of events affecting its competitors. As we've seen, Paxos, who issues BUSD, have had a Wells notice by the SEC, and they have stopped minting of their stablecoin. And we also saw Circle's USDC depeg from the dollar following the SVB collapse, but this is all back up and running now. But it did cause a little bit of fear around the stablecoin industry. We've seen a little bit of diversification, people flooding their assets back into USDT if they're looking for a US dollar-based stablecoin. But we've also seen diversification on the different fiat currencies that the stablecoins are based upon. So people are moving away from US dollar-based stablecoins and moving into GBP-based stablecoins, Euro-based stablecoins, Yuan-based stablecoins. We're seeing a bit of diversification that way within the cryptocurrency industry as well, which is really, really interesting. We're also seeing in Hong Kong the regulation around cryptocurrency lighten a little bit. Cryptocurrency was completely banned in that country at that time, and now they're starting to lighten those jurisdictions, allowing themselves to be a place where cryptocurrencies can be used and invested into. So we are seeing adoption in that way. Let's continue. That was a complete rabbit hole, completely gone off topic there. So we can also see here users of Bitslato have regained 50% of frozen assets via the Telegram bot. Bitslato has reported as partially restored withdrawals for users and plans to debut a peer-to-peer trading platform next. So 2 months after being closed in a joint operation by Europol and the United States authorities, the Russian-linked cryptocurrency exchange Bitslato has partially opened withdrawals for users. Now this is absolutely amazing. This is not something that we expected to see this quickly, or not something I expected to see this quickly. Usually things like this take a long time. I mean, we saw Mt. Gox take a huge amount of time. That's still not even finished yet. That happened in 2014, I believe. So to see Bitslato turn this around so quickly and give their users 50% of their funds back already is a really, really positive thing to see here. Hopefully they continue to make their users whole, and we'll see how this continues in the coming weeks. We also have the UAE Central Bank has announced the launch of the digital dirham strategy. So they have said this is a risk-free form of digital money issued and guaranteed by the central bank. So we'll see how this plays out in the coming weeks. We're seeing a huge amount of conversation over on crypto Twitter right now about central bank digital currencies all around the world. It seems that they are starting to be launched in different jurisdictions more and more. Many people are very, very against central bank digital currencies. So we'll see how this plays out. The final article we have here is one more to go. Don't forget, if you haven't already, to like and subscribe and press the bell notification button so that you don't miss the latest cryptocurrency news. As I said, we do these live streams every single weekday talking about what's happened in the markets, and we'll finish off today's stream with some Bitcoin analysis as well. So make sure to stay tuned for that. We have one last article here, which is that Putin is strengthening the yuan's role as Russia's currency of choice. So, as they look to counterbalance the US dollar's worldwide dominance, China and Russia have said their alliance was not confrontational in nature and not directed against third countries. The leaders also called for an acceleration of the process of establishing a multipolar world order. We can see here that Putin has said, "We are in favour of using the Chinese yuan for settlements between Russia and the countries of Asia, Africa, and Latin America. I'm confident that these forms of settlement in yuan will develop between Russian partners and their counterparts in third countries." Now, China has been an economic lifeline for Russia during international sanctions stemming from its invasion of Ukraine, with Beijing agreeing to buy oil and gas exports from the isolated country, though at a discounted rate. So that is what we're seeing there over there, obviously. We can see here clearly they have definitely been an economic lifeline for Russia during international sanctions. China have stepped in and offered them a helping hand to continue helping them facilitate their transactions, and we are seeing them pair together now, and Russia using the Chinese yuan for settlements between Russia and countries of Asia. So that's what we're seeing in the mainstream news today. Let's move on now to the Bitcoin price, see what's happening here. We have it on the 1 minute chart because we were looking at all the excitement of the interest rates yesterday at the start of today's stream. Let's see how Bitcoin is performing today. If we go over, let's delete all of these lines and start again. We can see here, let's remove them all. We had some volatility yesterday, and this is because the US interest rate announcement. We saw the US interest rates Let's change the tab for today. We are talking about Bitcoin analysis right now. Let's check that everything's running smoothly before we continue with today's stream. We're almost at 500 viewers live on Binance Live app. If you are new to Crypto Saving Expert, please make sure to like and subscribe and press the bell notification button over on YouTube at cryptosavingexpert.com, and go over to our brand new website, Crypto Saving Expert, to get the latest news, guides, courses, and market data completely for free. Make sure to go to cryptosavingexpert.com and press that big sign up button there. Let's take a look at the Bitcoin chart now anyway to see what's been happening in the markets. We can see here clearly on the 4-hour chart, overall we've seen a nice move to the upside in the last couple of weeks, but we did see a big dump yesterday. I mean, it wasn't that catastrophic. We saw us come down to, let's get this right, we need to be on the 1-hour chart for this. We saw a dump, let's measure this, from up at $28,650 down about 7% to $26,650. So we saw exactly a $2,000 move to the downside. Now this, I believe, is because we were expecting a 0.25% increase in the interest rates yesterday, and that was all pretty much priced in. We didn't see any nice big moves to the upside, so people just were deciding to take profits, and then comes fear, and then comes liquidations, and we just see a solid move to the downside at that point. Overall, prior to the announcement, we did see us break through this level of resistance at, let's say where this was, $28,340. We have unfortunately fallen straight back down below that, though. It was classified as a fake out. Hopefully we will retest that level in the next couple of days and see if we can break through it. As usual, we are back to Thursday now. We are coming close to that CME gap opening once again at 10 p.m. UTC time. Tomorrow evening, we will see another CME gap open. So let's take a look at the CME chart right now to see what we are at. We need to do on TradingView. If you are wondering, BTC1 exclamation mark is what you need to type in, and then we get the CME chart up for Bitcoin. We can see here we have a CME gap currently at $20,400, and we also have one up at, let's get this right, $35,250. Both of these acting like a magnet for the price of Bitcoin. So this is the CME chart. This is the Chicago Mercantile Exchange. They are operational every Monday to Friday. They are the biggest derivatives exchange in the world, but when they are not operational between Friday evening and Monday morning, we see a gap in the price of Bitcoin because Bitcoin trades 24/7. So before this gap, for example here, this is where the candle closed for Friday evening in the CME futures, and then on the Monday morning, Bitcoin was trading at 21,245, which just leaves a gap in the chart for the CME. Now, when we look at this, these gaps act like magnets for the Bitcoin price and for all other assets. So to fill this gap and take that magnet away, we need to trade within that price range. Right now we have a gap at $35,255, and we have one down at $20,410. So these are both acting like magnets because we haven't yet traded in that range since the gap was created. So that is what we are looking at there. Interesting to see how this will play out. $20,400, in my opinion, isn't something that is likely to happen within the next couple of weeks. When we see this fear within the banking industry for the US, I expect Bitcoin to continue moving to the upside. Let's take a look at the fear and greed index here. I always use this one here, and we can see that the greed has started to slow down a little bit following that move to the downside yesterday. We are now seeing greed at 57. We had seen it at a high of 68, I believe. That's when it was got to. Actually, we can see the chart here. It got to 68. Yes, that's how high it got. It has started to calm down now, though. Something I would like to see. I don't like seeing lots of greed within the market. It absolutely petrifies me. When there's fear, I like to buy. When there's greed, I'd like to sell. But right now, I just don't like selling. So I just believe that we could continue higher. So it's a sticky situation to be in right now. Interesting time to be in the markets, 100%. There is volatility to come. There always is within cryptocurrency. It's very exciting. It's not exciting time, interesting time to be in the markets. And we'll see how this all unfolds within within the next couple of weeks. As I said, we do these live streams every single weekday talking about what's happening in the markets, taking a look at the price of Bitcoin, analyzing the charts, taking a look at the news. So make sure not to miss them and go over to our YouTube channel at Crypto Saving Expert. Press like, press subscribe, press that bell notification button so that you don't miss the latest updates. All in all, that is everything from me today. So thank you very much for watching, and I will see you all tomorrow. Let's make sure we can shut all this